on this computer. All right, we are recording now. All right, so we're in chapter 2. I'm encouraging you all, it's to read your book. I know listening to the PowerPoints is super helpful because I make the PowerPoints myself, but the book should fill in extra information. So we go to Wiley Plus through Wiley Plus resources, then we find the table of contents and we find chapter 2. We shut down the table of contents so we have more room on our screen. All right, so let's just page through here. Learning objectives, learning objective 1, and this illustration 2-1, I know I talked about it last week, but it is super helpful in doing your homework. So this is a classified balance sheet, and I'll go over these categories and how things fit in, because they're new terms for you. So in the chat right now, I want you to tell me how many asset accounts are listed for this company. How many current assets, how many long-term investments, how many property, plant, and equipment accounts, and how many intangible asset accounts do you see here? Just throw it in the chat. So give me a number in the chat. Close, Braden, one more. So which one did you leave out? So if you could just read off what you think the accounts are, it's going to be cash, debt investments, accounts receivable, notes receivable, inventory supplies, and prepaid insurance. I want to make a point that that title, current assets, is not an account, just the list underneath. Then we have stock investments, investments in real estate. The title is long-term investments. It is not an account. It's just a title. And then property, plant, and equipment. We've got land and equipment. And I'm guessing, Braden, you did not count accumulated depreciation equipment. Am I right?
Yeah, I didn't count.
Yeah, that's a weird one. Yeah. But
I wasn't quite sure.
No worries. That's actually an account. And then intangible assets, we have one account, patents. Those 4 categories are not accounts. Okay. Under liabilities and stockholders' equity, we have current and long-term liabilities and a total, and then stockholders' equity. So the big changes this chapter are current and long-term liabilities. Stockholders' equity is the same as it was in chapter 1 with just the 2 accounts, but we're breaking out our debt. What is current? And does anybody remember from their reading or the PowerPoints what the definition of a current liability is? What makes it current versus long-term? You guys know? You can put it in the chat or call it out.
Liability that you have to pay within the year.
Correct. So if I owe you money, Hamza, and I owe you money and it's due on October, what's today, 4th? October 3rd, 2023. Is it current or long-term? I owe you money. I'm going to write it. I owe Hamza money, lots and lots of money. And I must pay on October 3rd. Current liability for me or long-term liability?
That's current.
Yes. If I owe you money and I have to pay on October 4th, 2023, what is it? Is it still current or is it long-term? It's tricky. 50-50 chance, Hamza.
So long-term?
It is long-term. It's more than a year. So October 3rd is 365 days. October 4th is 366 days. Okay. So definition of a current liability or a current asset, it has that 1-year threshold. And Braden, you're right. Braden put a comment in the chat that isn't it also one operating cycle, not a business, but operating cycle. And The operating cycle is usually, for most companies, it's shorter than a year. The definition of an operating cycle is, so let's picture Nordstrom. Okay. The time from when they pay money out, perhaps for inventory, they pay for the inventory, it goes to the warehouse, they pay for it, the distribution center. Then it gets shipped to all the stores, sits on the floor in the store for 30, 40 days. Let's say the customer uses a Nordstrom credit card. So they buy a beautiful cashmere sweater for $300, nothing I would buy. But they use a credit card, and it's a Nordstrom credit card. So they don't have to pay for another 30 days. So it was in the distribution center, maybe for 10 days. Then it was in the store for 30 days. Then I buy it, or somebody buys it, and they don't pay for another 30 days. So the operating cycle for that item would be 70 days from cash back to cash again. So the length of time it takes for cash to be spent, to be collected again, okay? For most companies, it's going to be much shorter than a year, okay? For companies that do huge projects, it could be longer, all right? All right, so these current liabilities, long-term liabilities. And then up here in the assets, we have current assets, and then we have 3 different kinds of non-current assets, okay? So I want to go to the PowerPoint and kind of give you the definitions of all these accounts so that you understand why they're in these categories. Do you want me to go into more detail, or is that enough coverage of the balance sheet? Let me know. More discussion or less? Is this enough? You can direct message me. Good enough for me. Okay, so we got one good. So let me just quickly just bring up just a couple of definitions because I think they're tricky. Let's see. There's a couple of these that have similar ones. Okay, can you guys see my PowerPoint or no?
Yes, we can.
Can you see the slideshow or just the basic picture?
I will see both.
You can see both. Okay, let's do this. All right. So classified balance sheet, the 4 categories we talked about. Let me do this. I don't want to do this. Let's do that. Show the big picture. No, it still wants to do that. All right, fine. There we go. Okay, what do you see now? Do you see the slideshow or no?
No, we
No.
just see your desktop.
All right. I'm using 2 monitors, so it's making things a little goofy. All right, we'll just do it like that. All right, so we have 4 categories for assets. All right. And as we said, within 1 year or the operating cycle, whichever is longer. For this class, think in terms of 1 year. All right, so the categories that are on the Franklin balance sheet that we just looked at. So cash, debt investments, accounts receivable, notes, inventory, supplies, and prepaid insurance. Use this order when you create the classified balance sheet. And that's why this is such a great resource. First cash, then short-term investments, which can be debt or stock, as long as it has the word investment after it. Accounts receivable next, notes receivable, then inventory, where we expect to move our inventory faster than we would our supplies. And that's why it's listed ahead of supplies. Supplies we might buy for 6 months at a time. And then your prepaid insurance or any other prepaid such as rent, okay? All right. All right, I'm looking at Cabela's. That's a popular company in the area. They're out of Post Falls, Idaho, I believe. And they got bought out. So they no longer, I can no longer get their statements because they're under another company called Bass. But you can see Cabela's, think of it as like a Nordstrom, but it's hunting, fishing, and outdoor stuff. We got your cash, we've got accounts receivable, prepaid. That word expenses, I'm not crazy about. I'd rather they say prepaid rent or prepaid insurance. And then you can see inventory. Okay. All right, so I want to talk about the next category. So remember, we had current assets. So let me go back to the this one here, where it says debt investments. You could, let's highlight that. You could have stock investments there and not down here, but the homework problem would have to tell you that it's short term. Okay. In this case, Franklin already knows it's short term. If it's long term, it would be under here. Okay, so what is a debt investment or a stock investment? I mean, it's kind of a sophisticated concept to teach first quarter accounting students, but essentially it means company had so much extra cash that they didn't want to leave it in their checking account and earn very low interest. They want to okay, you can see this. You can see Franklin right now. That's the page I'm on. So they want to get a little better interest. And if they buy stocks or something called bonds in other companies, there's more risk, but there's also better returns. So if they do a debt investment, that means they actually loaned money to another company, and that other company is going to repay the loan plus interest. It also means, because of where it sits on the balance sheet, that it's something that's easy to cash out. So if the company says, I don't want to carry this debt anymore, they can redeem it immediately. And we're going to talk about that more in Accounting 202, but that's essentially, these are very liquid assets. They're a little higher risk, but the idea is more risk, more interest that'll be paid to the company. Right. So let's go back to the PowerPoint real quick. So long-term investments is the next category. Long-term investments can also be stocks or debt, also called bonds, in another company. They could also be land that the company has bought but is not using. So maybe they buy a piece of property, but they don't have a factory on it or a store on it. They're just saving that because people make money in the real estate market, and that's another way to make an investment. So that long-term investment category could say something like real estate investment or land held for sale, that kind of thing. All right. Property, plant, and equipment at Cabela's, they're not listing the different accounts. I would like to see how we showed it on Franklin, where we actually list land, equipment, and then underneath equipment, we put accumulated depreciation, equipment. If we had a building, it would go under land. All right. And finally, we have intangible assets. These we don't touch, and they can include things like trademarks, patents, goodwill, copyrights. If you see these, they go under intangible assets. These are items that the company has paid money for, like a patent. I want to buy your patent. They've paid the inventor the money for the patent, and it goes under intangible assets. Or they've paid someone for a trademark or paid someone for a copyright. Goodwill is another type of intangible asset. Okay. So I really want you to do this problem, but I don't know if oh, here comes Connor. Okay. Okay. Let's see. Can you give me the assets section of the, can you give me the current assets section of the balance sheet. Give me the total, what you think is current assets. I'm going to give you 2 minutes. Hi, Connor, welcome. Oh, we've got a chat. And Braden, can I share your question with everybody? I think that's interesting.
Yeah, you can share that.
Braden just asked, where would you categorize a domain? So for example, starbucks.com, they had to pay somebody for that domain. Is that what you mean? How much
Yeah.
would you pay for a domain?
My mom's business has a domain. I think she said she pays like 20 bucks a year for it or something like that.
Yeah.
So
And when I looked into it 2 years ago, it was $20 a year for a GoDaddy domain. It was like a subscription. And in chapter 2, we talk about the concept of materiality. And so we say, is the cost of accounting for something worth less than the benefit it brings? And so to put a $20 item on your balance sheet is just too much bookkeeping. So we wouldn't do it. If you paid millions of dollars for something, maybe your Starbucks, but your domain got bought really early on by somebody else and you use another domain, then you would probably put it under intangible assets and depreciate it. Yeah. But if it's just small dollars, we'd say it's immaterial. We don't want to put it on that domain. Okay, can somebody give me the total for current assets and the order? Go ahead and put it in the chat. And I think you're right. Is that current assets or total assets? Total assets. Okay. I want the order for current assets. And I want my calculator. Yeah. What's the first item? Let's do this. Everybody, the first 3 items in order for the current assets section. Give me the first 3 items.
Cash, accounts receivable, prepaid insurance.
Almost.
isn't it inventory and
Inventory.
then
Inventory,
prepaid
then
insurance?
prepaid insurance,
Yeah.
yeah. So we're just, Connor, we're using as our guideline, just as kind of a little cheat sheet. The classified balance sheet in the textbook, Franklin Corporation illustration 2-1, and when we're going with that order. So you see cash, accounts receivable, inventory, and then the prepaid.
Okay, is that pretty much everything that will be on the quiz today? Or is there different assets that might be on there as well?
If you had, so on that list, it says prepaid insurance. It could be prepaid rent.
Okay, so it could be prepaid anything.
Mhm.
Okay.
So, all right. So then so we have 4 items. So what's our total for current assets?
Isn't that 3?
I gotta add it up. How much? What's our total for current assets? What's our total dollars for current assets? Put it in the chat. That looks right. Okay, I'm gonna put the answers up. The other section is just equipment and accumulated depreciation equipment. And that's gonna be under property plant. So this balance sheet only has 2 of those sections, even though we learned about 4. So let's put the answer up. Okay, so cash, accounts receivable, inventory, prepaid insurance, total is 7,600. And then under property, plant and equipment, we have equipment and less accumulated depreciation equipment. So this company only has 6 assets right now. Okay. All right, current liabilities within 1 year. And what I would use, Connor, is I would use the PowerPoints for all the accounts. So anything with a payable, accounts payable, salary and wages payable, notes payable, interest payable, income tax payable are common examples of current liabilities.
Okay, and these are just your slides for chapter 2, right?
That's correct. You can use the slides, or you can watch the videos which do the slides. Okay. I want to
Okay,
draw your
perfect.
I want to draw your attention to also included are current liabilities. Also included as current liabilities are current maturities of long-term debt. Okay. I want to give you a quick problem here. Let's say, let's bring up Word. Yeah, here's a quick problem. Share my screen, new share. Okay, here we go. Here's the problem. I don't want that. Problem 1. Can you see me typing here? You have a long-term debt. Can you guys see that? Term debt. Can you guys see my Word document? Yes, no?
Yes.
Yeah,
You have a long-term debt of $75,000. In the current year, you must pay back $15,000. So let's say you're preparing a balance sheet. How much is current liability of this debt? How much is current liability? And how much is long-term liability? Put it in the chat, direct message me. Don't say it to everybody. Braden, you're correct. Connor, you're correct. Hamza, you are almost correct. Add those two together. So even though the total is 75, you're going to break this up. You're going to say 15,000 for current. And how much for long term is 60. Okay. 75,000 is nowhere. You're splitting it up between the two. Okay. All right. Any questions on that? So that's what we're talking about.
so current assets, current liabilities, there, quick order, we have to put them in.
Can you say that again, Hamza? You're breaking up.
The current liabilities. So when we're listing them on the balance sheet, is there a specific order, like does the accounts payable come first, payable?
Yes, yes.
Payable.
So Hamza's asking, what's the order for this? Use the order. So let's go down. Can you see the, hang on, let me reshare. Okay, go back to the Franklin Corporation and use this order for your current liabilities. I have seen accounts payable first, but notes payable or accounts payable first. And then I usually just list them in the order I get them. It's not as strict. Theoretically, it's what is due first. But every company has a different story when their liabilities. Current assets are different. They have a particular due date. Okay. Long-term liabilities, we have mortgages and notes. So let's talk about the definition of those guys.
Quick question.
Yes.
On the actual balance sheet for the homework, it makes you say current portion. On a real balance sheet, do you have to do that, or can you just split the notes payable? You just say
Say
notes
notes
payable for
payable and
both.
notes payable.
Yeah, because it said it on that, but on the homework, it makes you, for the current liabilities, it makes you say current portion of notes payable.
Are you doing a pull down menu?
Yeah.
Yeah, do whatever they say on the pull down
Okay.
menu, but notes payable is fine for an exam. Okay. So long-term liabilities due greater than a year, typical long-term liabilities, bonds payable, mortgages payable, long-term notes payable, leases and pensions. So going back to Hamza's question, what order do we use? I would start with notes payable and accounts payable, and then I would just take the list. I'm sorry, I would start with I would go with the order that they gave you, mortgage payable, because you don't know from reading the list what the due date is for the long-term liabilities. So just take the order that they give you the problem. Okay. All right. All right, real quick, which of the following is not a long-term liability? Bonds payable, current maturity of long-term debt, long-term notes payable, mortgage payable. Go ahead and put in the chat A, B, C, or D. Correct, correct. All right, you guys got it. It's B, yeah. All right. And stockholders' equity is the same. Common stock and retained earnings, okay? All right, I want to do this really quickly, just because I think it is helpful. And the order is going to be, where are we? Okay, it's going to be Anis, Braden, Connor, Hamza, Julia. So I'll say salary and wages payable. Anis, which one is it? Which category is it? Current assets, long-term investments. You can either.
Current liabilities.
You are correct. Can you see that?
Yes.
Okay. Next is Braden, service revenue.
I think it's current assets.
Revenue is not on the balance sheet. So it's on the income
Well,
statement.
isn't it? Yeah, it's not a payable or a receivable, so I wasn't sure.
No, no worries. That's what we're doing it for. So it's going to be an NA because it's not. So accounts are either, except for dividends, accounts are either on the income statement or the balance sheet. So this is set up so it's all balance sheet. But if we come across an income statement account, it's going to be NA. Okay.
Okay.
All right. So Anna's interest payable. No, sorry. Connor, interest payable.
It's gonna be current liabilities.
Yay. Hamza, goodwill.
Last,
Say it one more time.
in last,
Good. You're lucky I can read your lips because you're cracking up. Okay, Julia, depreciation expense. Julia, are you there? Julia? Okay, we'll go back to Anis. Depreciation expense.
I think it's current or long-term liability. Long-term liability.
So revenues and expenses live on the income statement.
Oh, okay.
So which one would it be?
Depreciation expense.
It's a trick question. I got
It's a
tricked
trick.
too.
So all of these are balance sheet accounts. If it's
So
not a
NA?
balance sheet account,
Yeah.
NA, good.
Yeah.
All right. Julia, let us know when you're back. Braden, mortgage payable due in 3 years.
It's a long-term liability.
Good. Connor, investment in real estate.
Would that be a long-term investment or would that be property?
Because it says investment in real estate, that
I would say-
don't know. It's going to be long-term investment.
Yeah,
If
that's
it-
what I
if-
thought at first.
Yeah, it means the company's not using it in their normal operation. They just bought it as an investment.
Okay.
The long-term liability. Okay, Julia, can you do, no, and I'm gonna give you another one.
If they're actively using it, would it go under PPE?
Yes, if they're using it for a factory or office building, it would definitely be PPE. Okay, and then equipment, I'm gonna do, who's next? Hamza,
the
PPE, correct. Julia, accumulated depreciation. What category would that be? I gave her the harder one.
Is it current liabilities?
It is not current liabilities.
No. Mm.
It goes with another account. What account does it go with? Let's back up to that sample. Let me back up here real quick. So the accumulated depreciation goes with whatever asset it depreciates. Okay. So what is accumulated depreciation? It tells us how old the asset is. So we've written off about what, 20% of this asset. So we subtract accumulated depreciation, and the asset value is now, book value is now 8,000. Even though we paid 10,700, some time has passed and we've depreciated the asset. So it's going to be under property, plant, and equipment.
Mhm.
Okay. Anis, debt investment short term.
Sorry, that would be current assets.
You would think, but it's not. Yeah, you're right. I'm sorry. I'm thinking of something else. Current assets. You got it. Braden, retained earning. No, Braden, you're getting unearned service revenue. Hamza, you're getting, or Connor, you're getting retained earnings.
Retained earnings would be, ooh. I think that's NA, right?
Nope, it's on the
Oh,
balance sheet. in a very-
Uh, retained earnings is probably current asset.
Nope, it's under stockholders' equity.
Stockholders'
Oh.
equity.
So
Jeez.
there's two items under stockholders' equity. One is common stock and one is retained earnings. Common stock are your investments that people make in the company, like on the stock market. Retained earnings is where we put the lifetime profit and loss of the company. So we call it contributed capital and earned capital. Okay, last is Braden unearned service revenue.
I think it's NA.
Nope. I know
Okay,
it has
then-
the word revenue.
Then
in
it's a
it.
current asset, I'm pretty sure.
It is. Do you know what unearned service revenue is?
Not really.
Okay, let me
I think it
define
was
it.
on one of our homework questions, but I kind of forgot about it.
It's a new concept. So let's say you are the Mariners and you sell 5 tickets for a game that's going to happen in, well, now it's going to happen in the playoffs, but the playoffs have not happened yet. The playoffs, I think, are in October. I don't know. I can't remember, but it's at the end of October or in November. So the game hasn't happened yet, but the Mariners took your money and they owe you the game. Just like
Oh.
if you bought an airline ticket, you buy the ticket, Alaska Airlines owes you the travel in the
Well,
future.
then it's a liability, but if it depends on when the game is, doesn't it?
Mhm.
So if it's 3 months, then it would be a current liability.
Right. And most of us don't pay for things less than a year out. Sometimes we do, but most of us don't. So it's a current liability. Okay. All right. So the last piece of this chapter is ratios. And the ratios are profitability and liquidity and solvency. And we have 3 ratios this chapter. A student asked me yesterday, are all the ratios on the quiz? No, 2 of the ratios are on the quiz. Okay. All right, so the first ratio has to do with earnings per share. This is the one that's not on the quiz. It may be on the exam, but it's not on the quiz. It's just a little bit more complicated. So in order to do this ratio, we look at the income statement and we go to the bottom of the income statement and we say, what is net income? Here's net income for 2014. Here's net loss for 2013. So in terms of a trend, they have improved a lot since the prior year. Okay, so the calculation is net income minus preferred dividends. Preferred dividends are dividends we pay if the company has preferred stock. we're only working with common stock in this quarter. But your homework problem may give you preferred stock. I'm sorry, preferred dividends. If so, you would subtract it. Okay. You get that number, net income minus preferred dividends. Up here, you can see it's 0. And then we calculate average number of shares outstanding. Weighted average common shares, not dollars, but common shares, number of stock shares the company has sold. So at the beginning of the year, they had sold 338 shares. At the end of the year, they sold 347 shares. And this is all in millions, so it doesn't matter. We don't have to add all the zeros because all the numbers are in millions. So you'll get the same answer whether you add the zeros or not. So to get weighted average shares, we add 338 plus 347 divided by 2, and that's your number. Okay. So a weighted average share would be like, let's say I weighed 180 pounds last year, and let's say I weigh 120 pounds this year. My average weight, you'd take 180 plus 120, that's 300 pounds divided by 2. My average weight would be 150 pounds. All right, so let's show the math here. The top is going to be 532 net income minus preferred dividends. The bottom is going to be end of year, beginning of year divided by 2. And the answer in this case is $1.55. So the average shares of stock for this example, the total is 685 divided by 2. The average shares are 342.5. So $1.55 a share. Now let's look at the previous year. The previous year, you have a different beginning balance, and that ending balance for 2013, you can see it's the same number because it's also the beginning balance, but we're just going to use the 2013 numbers. And we got a negative number, so we take 338 plus 341. And it's a negative number, so you want to show it as a negative. And in accounting, to show a negative, we can put a minus sign, or it's more common to put parentheses around the number. So it's a minus $1.30. In the current year, it's a positive $1.55. So the company has improved quite a bit. Okay, I'm not going to do this problem. All right, the second type is, so that was a profitability ratio because we use net income. All right, now we're going to do a liquidity ratio. First, we're going to do a calculation called working capital. That's not a ratio, it's just a calculation, and we take current assets only, not total assets, minus current liabilities, and that gives us working capital. Okay. Next ratio is current ratio. It's very similar to working capital, but instead of subtracting, we take current assets divided by current liabilities. And all I can tell you here is memorize this one and remember that current assets is on top and current liabilities is on bottom. And we want this ratio to be greater than 1 because that means we have more dollars in current assets than we have in current liabilities. So let's look at Best Buy. Their current assets were $10,485. Their current liabilities are $7,436. And their current ratio is 1.41 to 1. And most of the time you don't see it like this. Most of the time it just says 1.41. We don't add the to 1. So what they're saying is we have $1.41 of current assets for every dollar in current liabilities. So that's great. And then in the prior year, that number was 1.11. So now we're at 141. Last year we were at 111. Has Best Buy gotten better or worse in the current year?
Better.
Much better, yeah. And their competitor is better than them. They're 168. But the industry average is worse. Okay. So these are the kind of ratios we're going to be using on the project. So we're learning them now, and then you'll be applying them to your own companies. Okay. All right, the last ratio is debt to assets, and the name of that ratio tells you how to calculate it. Total debt, total liabilities divided by total assets. Now, because we're putting liabilities on top, we don't want this number to be super high. So total debt for Best Buy, 10,024, total assets, 14,013. Debt to asset ratio is 72. Now, can you put that in your calculator? And you're going to get a number that looks like this. Let's see, I can put it in the chat. When I put it in my calculator, it looks like 71533. Okay. So to turn this into a percent, we multiply 71533 times 100, and we get 71.53%. Okay. Now you can see in the PowerPoint, it says 72. But whenever you do a ratio in my class, I need you to put 2 decimals on it. So over on current ratio, you can see here, we had 2 decimals, 1.41, 1.11. And now here, I don't want 72, I want 71.53. Okay. Believe me, I have worked at companies where the tenths of percent made a difference in somebody's bonus. Okay. All right. Okay, that pretty much wraps up the chapter except for the vocabulary terms, so you can take a look on those. But I wanted to do a new share real quick. I know we're running out of time. Let me go here. And I want to look at Unit 1. Okay, I want to go to, it's time to pick your companies, and you'll find them under people groups. So I'm going to do student view here, and I'm going to see, so I'm going to go to people. So these will be your project teams. There will be some individual. So these are where you sign up for your exams. So if you haven't, the next exam, we have 3 exams. So if you haven't had a chance to sign up for your exams, please do so. And then here we get down to the companies, 1, 2, 3, 4, 5, 6, and there's 2 companies each. Okay. And it's Chipotle and Jack in the Box, Coke and Pepsi, and so forth. So a couple of these teams are full, but we've got room in General Mills.
Professor, I don't think you're sharing the.
Oh, you're not seeing it? Oh,
no.
bother. Okay, thank you. Why is it not sharing? It's acting like it's sharing. Okay. Stop share. Okay, we'll do that. Share screen. Thank you for interrupting. I appreciate that. Okay, so we're going to go to people. And under people, can you see it now?
Yes.
Okay, under people are your exam times. Scroll down, and then you'll see 1, 2, 3, 4, 5, 6 pairs of companies. And if it's 6 students, it's full already. We have openings in General Mills and Kellogg and Chipotle and Jack in the Box. So be sure to sign up for your companies. Okay. And then we're going to go back to units and modules. And Thursday, I believe Thursday or Friday, you need to turn in your financial statements. And I have the company analysis project here, project instructions, and how to access financial statements from the SEC. It's not very hard. So we can, let's look here, company analysis project. So here's a short video on how to do that. It's from last quarter, but students found it helpful. So pick your companies, and then your next part of the assignment is to upload. Each student, every team member uploads the financial statements. And you can see the instructions here, or you could watch a video on that, okay? And there's step by step, what do you hit? So you're gonna open this up and it's gonna tell you exactly how to get to the Security and Exchange Commission website and how to download statements. Okay. All right. And let's stop share. So let's take a quick look at the calendar. And hang on while it loads. Doesn't want to load today. Here we go. Nope, it's not loading today. All right, let's fix this. Hang on just a sec. Here we go. Can't see the calendar today. All right, it doesn't want to load. Too bad. All right. So I'm going to look at my calendar and for our class. So tonight is quiz. By tonight, you need to pick your company. And Thursday night, we need to put in our, oh, that's why I didn't do it. Oh, got it. No wonder. I got it right there. Okay. Tonight is pick your company quiz, and then Thursday night, upload your statements. All right. I will be in my office hours tomorrow and at 9:20 if you have additional questions. Braden, do you want us always to round? So if in my example, no, Alice, you cannot use your phone's calculator on the quiz. The quiz should have a calculator on it, but just get a simple calculator. So in my example, I had to round here, but you always want to leave 2 decimals. So when you say round, what do you mean?
I meant like the last number. So you said to 2 decimals. So if it was
Yeah.
like 71.355, do you want us to round to 36?
So if it was 71.355, the
Yeah.
answer would be 71.36%.
Okay. Yeah.
Correct. Yes, correct. Because it's 5 or higher, you round up. Less than 5, you round down. Thanks. That's a good question. All right, guys, I will see you next week or online.
Oh, I had one more question.
Sure.
So on the quiz last time, I had a little bit of trouble, just like remembering stuff and adding stuff together, like 2 numbers I would add up and then I would have to add up 2 more numbers and I couldn't really do that on the calculator. Is there any way that I could use a blank sheet of paper to write on during the quiz?
If you do that, you need to hold it up to the camera at the beginning of the quiz and show that it's blank.
Okay.
I haven't been doing that. So you said at the end, you want us to hold up our notes taking sheet?
Don't use notes,
Well,
but if
not
if
note
it's
taking, but I
scratch
mean, I've been
paper-
writing the equations out on blank pieces of paper. You want us to hold that up to the
You
screen
mean
when
you've
we're
been
done?
writing the
The-
using it as scratch paper?
Yes, like
Yeah.
like I've been writing out all the stuff.
That's fine. It's fine to use scratch paper, but what I want you to do is hold it up to the camera and so that the camera should be able to see your desk.
Okay.
So
So we should do that before and after or just before?
the camera should be poised at your desk so that if you're writing, you start the quiz and you hold your paper up and show it's blank. Okay. And
What
then
about-
the camera, if the camera looks at your table, it'll see that piece of paper on it, but you're just verifying that it's a blank piece of paper.
Okay,
So when
so
I
I
look
don't
at
have
the
to,
videos, I should see your paper, that it's as you're writing on it so that there's not another paper there.
so you don't want us to actually aim the camera at our faces? You want us to aim it down at our hands and our,
Where's
Or
your
sheets of
camera?
paper.
Where's your
I have a
camera?
laptop, so I can't see it if I take my quiz on a laptop, so I point the camera down, I won't be able to see the quiz.
Do it right now for me while you've got the camera.
I'm not on my laptop. I take it on a different on my
Okay,
laptop. So if I point, it's an in webcam. It's a
Yeah, I have
webcam
that,
in the
I have that
laptop.
too, so I'm trying to think. Yeah, you're probably right. So just hold it up at the beginning, that'd be
Okay,
fine. That's
yeah.
fine. We'll work with that. Usually what it is I'll get I haven't looked at the report from first quiz, I need to do that. But usually we have a service that looks at the videos and they'll say, go look at this minute for Connor, or go look at this minute for Braden. And then I'll go back and I'll look at it and see. And sometimes you can tell if somebody's getting extra help or looking at some other source. And then I'll have a conversation with the student in this case. So that's what it's looking at. Are you doing a lot of looking around? So holding it up at the beginning is a good strategy to kind of.
How many times did it mark me down?
I haven't looked at the
Oh,
report yet.
I'm just kidding.
Believe me, we'll have
Yeah,
a
professor,
conversation.
just heads up. I actually used my phone's calculator on the quiz, on the first quiz.
Okay,
Yeah.
please don't use it for the second one.
I also put my calculator on my desk. I don't know if that matters, but I punch the numbers in my calculator down too.
That's fine. That's
Yeah.
totally fine. You need a calculator. I can't do math without a calculator.
Yeah.
I can do it very
I
slowly.
actually was worried about it. I literally stood there. I've never used what's it called, the lockdown browser, and so when I was reading the rules, I thought it was basically saying that I can't move and stuff. So I didn't know you could write stuff. So I was literally sitting like this.
Oh, I'm sorry, Hamza. I didn't mean to scare everybody. We're all
I think I
using-
lost like 2 words. I lost like a 0.5 or something like that because I couldn't do every time I would do the addition when I was building the thingy, it would come out wrong because I thought I could use my phone for the calculator, and then though I couldn't write it down when I was adding them up. It was
I'm
bad.
sorry. It is, we're all using it in math and everything, a lot of departments.
Yeah.
That's why I do the live tests. Then I'm in the room. You can ask me questions. I think it's easier
Yeah.
to do a live test.
So
than
we can
typing
use
out
a
loud.
piece of paper, like a couple pieces of paper, just to do the formulas and stuff.
You cannot write down the formulas ahead of time, but it has
Oh,
to be.
I mean, like just so you can do
No,
the
like-
workout.
I think he means like
Absolutely.
I do. I'll put like A and then SE, and I feel like it helps me more to just write down all the numbers. And
That's
just
fine.
look
At the
them on a
beginning
piece
of the
paper.
test,
Yeah.
not before the test. All right,
Mhm.
I gotta go, guys.
Okay.
It's
All
been a
right. Thank you,
long day.
professor.
Yeah.
Thank
See you
you.
later.
Thank you.
Have a good one.
Thank you.
Bye-bye.